Okay, we're going to begin with section 2, applying the rules of debit and credit. And you're going to see here, I'm looking at the first transaction. What we have here is, at this point in time, each of you should be familiar with the rules of debit and credit, and those rules that we have for the assets, liabilities, and owner's capital accounts. We went through those in class, and we have those located on our posters over on the north wall. And you can use those to analyze these business transactions. And let's talk a little bit about how you're going to analyze these transactions. Whether your business is buying a new computer system or paying your utility bills or receiving money for sales, which we would call revenue, the accountant at the corporation or company is going to need to analyze how those transactions are going to be recorded. We're going to use these same transaction sheets we've done before. You can find this under Monday's work, Chapter 4, Transactions. And we are going to have the identify, the classify, and the plus and minus rules. We're going to have a new part called the debit credit rule, and then you're going to fill in the T accounts. So, the assets and equities transactions, that's what we're going to deal with first. How do you use a T account for an asset account? Well, that's going to be our first transaction, and these transactions are going to look awfully similar to the transactions we did in Chapter 3. We're going to apply the rules of debit and credit, complete the T account, and that T account is going to demonstrate the effects of the transaction on the accounting equation. So let's begin with transaction number 1. This should look familiar. On October 1st, Maria took $25,000 from her personal savings, and she deposited this amount to an open business checking account in the name of Roadrunner Delivery Service. So, as you know in the past, the first thing you're going to do is you're going to identify the two accounts. And looking at this transaction, we're going to have the accounts cash and bank affected and Maria Sanchez Capital. Again, you've noticed I wrote this in a full sentence. You're going to see momentarily when we get to the next transactions, that's not going to be required. And it isn't really here either. Just identify the two transactions here. The next thing you need to do is classify these transactions. At this point in time, you should know that cash and bank is an asset and Maria Sanchez is a capital. If you're still struggling with that concept, this is written in the black ink on the front right of my whiteboard. So please take a look at the list that I have up there for you. So here you see cash and bank is an asset and Maria Sanchez is an owner's equity account. The next thing we need to do is determine an increase or a decrease for each of these accounts. Well, as we added cash to our company, that's going to increase, and so is the capital account. That's going to increase by $25,000. Now, at this point in time, that's what we had done up to in Chapter 3. We're now going to add the debit credit rule, which is what we discussed or we lectured about in class last week. When we have an increase in an asset, cash and bank is our asset here. When it increases, as it states in our plus and minus rule, increases in assets are recorded as debits. If you're not sure what I'm talking about, look at the left or look at my posters on the right side of the room, on the north wall. Locate the asset accounts, which is on the far left, and look at the debit and credit parts. Debit always means left, credit always means right, but when we have an increase or a plus to the account, increases in asset accounts are going to be recorded as debits. You will debit cash and bank for $25,000. We also have an increase in our capital account. That's also indicated on our plus minus part here of the analysis. If we look over here again on the board and on the right side of the room, you'll see the far right poster is the owner's equity accounts. And we have capital in that count. And when capital accounts are increased, they are increased on the credit side. And that's stated here in the debit credit rule. Now, once you have that debit credit rule correct, it's really easy to fill out the T chart, as you're going to see below. All I've done is I've placed the text cash and bank right here. And I've created kind of a table format for you to write this in. You're going to probably need to hit the space bar a couple times or tab to move your text over here for the next account, which is your capital account. Again, stating right here, increases in assets are recorded as a debit. So on the debit side, I increase cash and bank. Increases in capital accounts, like Maria Sanchez, are recorded as credits. The increase of a capital account is recorded on the right side. So this is how we're going to go through these next 6 transactions. And I will go through each of these with you. As I stated in my opening video, it is imperative that you take your time to understand this content. I'm not just doing this to buy you busy time, but what it is, it gives you an opportunity to hear my voice and discuss amongst yourselves and see what I'm talking about. Please take your full time today to understand this concept, because when I come back from class on Thursday, we're going to be taking a test in the very near future. And although I won't be standing in front of the class discussing this with you, you do have this feature of the video lesson here right in front of you. So I hope this will be beneficial. We're going to move on to transaction number 2 now. All right, here we're going to take a look at transaction number 2. Again, going to look awfully familiar. On October 2nd, Maria Sanchez took 2 telephones valued at $200 apiece. You remember our iPhone example that we used in class last week, or even I would think maybe a week prior to that, where we took them from our home. They're each valued at $200, and we transfer them to the business, and they are transferred as office equipment. Again, your first thing you're going to want to do is identify the 2 accounts affected here. Office equipment and capital account are 2 transactions affected. Again, you will notice, as I stated in the first transaction, no longer is it necessary for you to write in a complete sentence. I hope at this point in time you know how to take notes that are effective for you. And for me, in a situation like this, all I need are the 2 accounts that are affected in this transaction. But the next thing you need to do is classify these 2 accounts. Office equipment, we know that's an asset, and we know Maria Sanchez Capital is an owner's equity account. We now need to determine if these are going to increase or decrease. Office equipment added to our company is going to increase by $400, the amount of 2 phones valued at $200 apiece. And our capital account will also increase by $400. Now we need to talk about the debit and credit rules. We know office equipment is an asset, and we know when asset accounts are increased, in this case increased by $400, they are recorded as a debit. So you will see I have typed in increases in the asset accounts are recorded as a debit. Debit the office equipment for $400. Increases in capital accounts, such as Maria Sanchez's capital, is recorded as a credit, also an increase. Increases in capital accounts are recorded on the right side, or the credit side. Again, you can simply take a quick look at the T-charts. Please type in the accounts. It really doesn't matter what account you type in first, whether it's the asset or the capital account. But you'll see I typed in office equipment. I've now added the word debit and an increase here. Not a bad idea, just a quick reminder. And here on the right side, Maria Sanchez Capital, it's a credit, also increased by $400. Again, when it comes to typing in the content for this section right here, it's going to take a little trial and error. It's set up in a way, you can see it's inside of a table. I've made these T-charts to help you give a visual benefit to what we're doing. So that is the completion of transaction 2. Make sure you have that content typed in for transaction number 2. Let's move on to transaction number 3. Okay, let's begin with transaction number 3. Again, a very familiar looking transaction. As a matter of fact, the next 5 transactions are going to be the exact same as we had in chapter 3. And in business transaction number 3, which we're going to see here, we're going to increase the asset and decrease another asset. So let's take a look at this situation here, where we are buying a computer system for $3,000. We are buying it by writing a check. So that means we're paying right now. We don't owe anybody any money or anything like that. We're just going to pay for it. Remember, writing a check is acting like cash in bank. So let's go ahead and identify the 2 accounts. And in this situation, the 2 accounts are computer equipment, and some cash in bank. I'm really not sure why I wrote bling bling, but I'm sure I had a reason at one point in time. Regardless, those are the 2 accounts that we have right there. Now let's classify the accounts. Both accounts in this situation are asset accounts, computer equipment and cash in bank. Hence why I said at the beginning of this exercise, business transaction number 3 was going to increase and decrease an asset account. So let's go ahead and take a look at the plus and minus. Well, when you spend money or you write a check, our cash and bank is going to decrease, but we've added some value to our company, and that is computer equipment, and that is increased by $3,000. I think this is where a lot of people sometimes get confused, and they feel like they need to add this to the owner's equity side as well. All I want you to do is think about it. If you feel like that's something you should do, just ask yourself, well, is that going to keep my accounting equation in balance? And obviously, if you add $3,000 to the right side of the equation, well, that's not going to balance it any longer. So it's as simple as just adding it to your equipment and subtracting it from your cash. Let's talk about the debit and credit rule. And this will be kind of easy because They're both asset accounts. And an increase in an asset, as we described in transactions 1 and 2 here, increases in asset accounts are recorded as debit. Left side, debit computer equipment by $3,000. And on the opposite end of the spectrum, the decreases in asset accounts are recorded on the right side. You'll see that again on the poster. So if you look at the far left poster on the north wall that says asset accounts, you'll see the word credit with a minus sign underneath it. That's our decrease side. We spent cash. Our cash is decreasing because we wrote a check for this computer. Therefore, it is credited. Go ahead and take a quick look here at your debit and credit rules for the T accounts, and you'll see we have the computer equipment listed first. It increased, just where I wrote the word debit on the left with a plus sign underneath it and the amount of $3,000. And on the right, we have credit with a minus sign as we wrote the check for the amount of $3,000 as well. Good. We've completed transaction number 3. If you need to pause at any time, obviously you have that capability to do so. And when you're ready to move on to transaction number 4, you can do so. All right, now we're going to deal with transaction number 4. And transaction number 4 is going to deal with an asset account and a liability account. So let's take a look at that transaction. On the 9th of October, Roadrunner has purchased a used truck on account from the company North Shore Auto for $12,000. Okay, so we're going to ask ourselves to identify these accounts right now. And simply enough, we know that if we bought it on account, remember that keyword on account means we're paying for it later. We're not paying for any of it right now. It does not say so. If it did, it would have said check or cash. So in this case, we have a liability account called accounts payable to North Shore Auto. Again, it's a great habit to get into to put the company's name after the payable account. In any given month, you can owe more than one person some money, so we should specify exactly who it goes to. And we added some delivery equipment to our business. So let's go ahead and classify those two accounts. Delivery equipment, as we know, we added a truck to our business. Delivery equipment is an asset account, and North Shore Auto's liability account or payable account is just that, a liability account. Now let's go ahead and do the increase or decrease amount. Since we added a truck to our business, delivery equipment is increased by $12,000. So this asset account is increased. And we also owe North Shore Auto $12,000. When you owe somebody money, it increases the amount. Not until you begin to pay cash or pay down that debt will you see a minus sign. So we are also increasing accounts payable. Let's go ahead and take a look at the debit credit rule for this transaction here. An increase in the asset account delivery equipment is going to be recorded as a debit. So we will debit delivery equipment by $12,000. When we have an increase in a liability account, it is recorded as a credit, exactly the same as that of an owner's equity account. Hence, it's on the right side of the accounting equation. Increased by $12,000, credit side. Take a look at the T-charts, and you'll see how I went ahead and filled those in. Delivery equipment, debited for $12,000, an increase. In the accounts payable, I probably should have posted this at the end of it here, NS, and you'll see I can go ahead and maneuver this a little bit and be more specific as I requested you to do the same. So we'll credit North Shore Auto's accounts payable by $12,000. Okay, we're going to go ahead and move on to the next transaction, transaction number 5. Okay, let's take a look at transaction number 5. We're on October the 11th. We sold one of our telephones on account to the Green Company for $200. Okay, so here we go. Did we receive cash? No, we know we did not because we see that word again, on account. So we are waiting to get money now because we sold something to somebody. So we have two accounts affected here. We have our office account affected because we lost a telephone, and we have our accounts receivable to the Green Company affected. Again, it'd be a good habit to put the company name after accounts receivable. You can go ahead and do so. I can't do that right now, otherwise I reveal the entire screen to you, and I know how you all work. You'll just type what I have there. So we'll hold off on that in a minute. Next, let's go ahead and classify the accounts. Accounts receivable to the green company, that's an asset account. And office equipment, we know that's an asset account. So both accounts in this transaction are both asset accounts. Let's go ahead and determine whether they have increased or decreased value. When we are waiting to receive money from somebody, in this case the green company, accounts receivable will increase by $200. Remember, only $200 because it's just one of our telephones. The phones were valued at $200 a piece. And our other account in this situation is the office equipment, and it's going to decrease as we lost one of the phones out of our company's business. Let's determine the debit credit rule for these two accounts. Accounts receivable, we know it's an asset. We know that when asset accounts increase, they are going to be debited. So here we debit accounts receivable. And we know the office equipment is decreased. And we know decreases in accounts are recorded as credits. So we'll write those down there as well. Once you have an understanding on that, you can go ahead and fill in your T-chart as you see here below. Accounts receivable to the green company and office equipment. And again, you'll just have to be flexible with my little setup I've created to get those centered over top of their T-charts. Accounts receivable is going to be debited, so you're going to add the $200. Here credited, you're losing the value of the phone. Credit on the right side, $200. All right, we're going to move on to transaction number 6 at this point in time. All right, on transaction number 6, you're going to see we are going to mail a check. The check is number check 102. If any of you have checking accounts, you know that you number your checks, or your checks have numbers in those. Really not a huge deal at this point in time, but as we get further into accounting, the organization feature that comes with your check numbers is going to be very vital. So I started including it in these sentences and transactions here. Anyways, on the 12th, that check was mailed for $350. It is our first payment on the truck that we bought back in transaction number 4. We bought a $12,000 truck. So we're making our first payment of $350. So we need to identify the two accounts that are going to be affected. Well, we wrote a check. We know that our cash and bank is going to decrease. We also are decreasing the amount of money that we owe to North Shore Auto. That was a liability account. So the two accounts here, cash and bank and accounts payable, are the two accounts that have been identified. We need to classify those two accounts. We know by now cash and bank is an asset, and accounts payable to the North Shore Auto Company is a liability. So you'll see I simply just placed those in the classify section. Now I need to determine the plus or minus. Cash and bank, we wrote a check that's going to decrease by $350, and now I owe less money to North Shore Auto. I once owed $12,000. I now owe $11,650. So I can decrease the payable account to North Shore Auto by $350. Go ahead and use the debit credit rule for these two accounts, cash and bank. Decrease in the asset, cash and bank, is going to be credited, or on the right side. And we also have a decrease in the liability account as we owe less money. Look at that poster over there and you'll see the minus sign under the debit or the left side for liability accounts. I think the easiest way to do that is take a quick look at these T accounts. Make sure you fill those in as well. You'll see that because we wrote a check and spent $350, that decreased our cash and bank, and a decrease in the asset account is credited, and we now owe less money to North Shore Auto. A decrease in a payable account is recorded as a debit. We have one more transaction to do before you move on to your homework assignment for the day, which I'll explain to you as well. So let's go ahead and begin with transaction number 7 next. All right, let's go ahead and begin transaction number 7. It is the last of the transactions that I will cover today on this video file, and also the last of the transactions involving our debit credit rule for Chapter 4. So let's take a look at transaction number 7, where Roadrunner has now received a check for $200 from the Green Company. This check is for a full payment of the telephone that we had sold to them back on October the 11th. This was our 5th transaction. If you're kind of going back and forth and taking a look, that might help. So let's go ahead and again identify the accounts that are affected here. We deposited a check. Oh, we got money, so we know that's cash and bank. And the green company owes us less money. That's going to be our accounts receivable account that we were waiting on. So they've paid us off. So let's go ahead and classify the two accounts. Cash and bank is an asset, and so is accounts receivable. The plus or minus on these sides, well, we received a check. You can see that right there in the sentence. The word received tells us that it's going to increase our cash. And because the green company is paying us off, and in transaction number 5 that was actually an increased account, accounts receivable is now going to decrease, or in this case actually disappear. Green company won't owe us any more money. Let's go ahead and do the debit credit rule for these transactions. Increases in the asset account, such as the cash and bank, is going to be debited for $200, be placed on the left side of the T account. A decrease in an asset account, in this case a decrease in accounts receivable, is going to be on the right side or the credit side. Take a look at the T accounts and go ahead and fill those in, where you see that cash and bank has been debited for $200 and accounts receivable credited for $200. If you've made it thus far, I'd like to thank you for taking the opportunity to watch this video. Hopefully it's been educational in a way that helped you learn these new steps of the debit and credit rule. We're going to go ahead and put you to the test in doing so by having you complete exercises 4.2 and 4.3. Thanks so much, and best of luck.